Good afternoon. With 3 weeks left until Labor Day, we are gearing up for our fall slate of financial classes. This year, we are offering 3 classes at the University of Wisconsin-Fox Valley. Let's Talk Money, both an afternoon and evening series, Empowered Solutions to Your Retirement, and Wills and Trusts, and 2 classes at UW-Manitowoc, Let's Talk Money and Wills and Trusts. If you know of someone who would like to receive flyers regarding our financial classes, please let us know. Meanwhile, to learn all about last week's market activity, please enjoy this weekly market commentary written by our investment analyst, Christian Peterson, CMT.
The major benchmarks ended mixed for the week after a downturn on Friday erased earlier gains. The Dow Jones lost less than a percentage point, while the Nasdaq Composite Index moved modestly higher. Within the S&P 500 index, technology and internet-related shares fared best, while defensive sectors such as consumer staples and real estate lagged. Trading volumes and volatility were low, as they typically are in mid-August as traders and analysts leave the confines of Wall Street for summer vacations in more spacious and relaxed places. In what may have been the week's most notable stock-specific event, shares in electric car maker Tesla jumped on Tuesday after CEO Elon Musk tweeted that he had arranged financing and was considering taking the company private in what would be the largest leveraged buyout in history. Shares of Tesla surged nearly 11% on the news, but the stock fell back over the next 2 days as some investors questioned whether the deal would actually go through. An escalation of the trade wars commenced on Friday when the Trump administration announced a doubling of tariffs on steel and aluminum imports from Turkey in retaliation for Turkey's jailing of an American pastor. A steep decline in the Turkish lira and other emerging market currencies increased concern throughout global currency and equity markets and was the main cause of Friday's pullback in the Dow Jones, which lost 196 points on Friday and wiped out all of its gains for the week. Meanwhile, tensions between the U.S. and China continued to simmer, with China announcing new tariffs on $16 billion worth of goods imported from the United States. Nevertheless, stock indices are still near their all-time highs due to strong corporate revenue and profits. We're now at the end of the second quarter earnings season, and the positive tone of earnings reports appear to be buoying the market in the face of economic and geopolitical news that might otherwise give investors pause. With 91% of companies in the S&P 500 having reported, the blended earnings growth rate for this quarter stands at 24.6%, while sales revenue increased by 10% from a year earlier. Both the earnings and revenue growth rates are some of the highest we've seen in nearly a decade. For the week, the Dow Jones fell 150 points to 25,313. The Nasdaq rose 27 points to 7,839, and the S&P 500 lost 7 points to 2,833. Oil was down $1 to $67.50 a barrel. Gold was essentially unchanged at $1,219 an ounce, and the yield on the 10-year Treasury fell 0.1% to 2.9%.
This weekly market commentary is written and produced in-house by the investment team at Winch Financial. If you'd like more information about our investment strategies or would like to attend a small group investment discussion, please call our office at 920-739-8577. We're always glad to help.